Welcome to the Compound Growth Podcast with Colin and Wheeler, where we talk all things growth. From financial growth to career growth, personal development to societal progress, we explore how each layer builds on the next, compounding over time to shape who we become. Each week, we break down complex ideas and emerging trends into clear, actionable insights. Because growth isn't just about numbers, it's about understanding the world and our place in it. The information in this material is for general information only, and is not intended to provide specific advice or recommendations for any individual. Investment advice offered through Integrated Partners, doing business as Ko-Fi Advisors LLC, a registered investment advisor. Integrated Partners does not provide legal, tax, mortgage, advice, or services. Please consult your legal tax advisor regarding your specific situation. Past performance is no guarantee of future results. All investing involves risk, including loss of principal. No strategy assures success or protects against loss. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that the strategies promoted will be successful. All right, Colin, we are back with another monthly recap episode of what just happened. September was a month full of policy shakeups, economic signals, tech drama, market jitters. Today, we're going to cover all of that. We'll cover policy, economics, tech, politics, markets, winners, losers, and whatever you think was the biggest news for September 2025.
Yeah, I feel like we got some good stuff. It was a busy month, but you want to dive in with something that was big headlines today, pharma tariffs?
Yes. So, I just turned off the TV in the background because they were, Trump was on there with Kennedy talking about pharma tariffs. And this is interesting because a couple weeks ago, I was talking to you about a Joe Rogan episode I listened to where he had a guest on there that represented a smaller manufacturer for like startup and early stage biotech and pharmaceutical companies. And he was talking about the battle against some of the big boys. And this seems to be kind of more along those lines, right? It's the biggest story of the month when it comes to the health and biotech sector, 100% tariffs on branded drugs without US manufacturing. And that seems like it really sets the table for the people who are winning to keep winning.
Yeah, I mean, what's kind of crazy here to think about is that all of the tariffs that we have spoken about before are really on countries. We always talk about the China tariff and the EU and, all these other countries that are getting hit with all of these tariffs. This is an industry specific tariff, which is something that is not something that we've really seen from this administration so far just yet. Certainly, there have been more taxes on certain areas coming out of certain countries, but this is more or less just a blanket statement on imported drugs. And what this is going to do is it's really going to set up for a few companies to potentially be big winners here. So when you think of what companies manufacture in the US, you've got Novartis, you've got Johnson and Johnson, you've got a ton of companies that have all of their production already set up here on the shores that will probably benefit, including Eli Lilly and Roche too. But with that being said, the companies that are obviously not set up for that are going to have some tough times, and these medium-sized businesses are probably going to be struggling too, because a lot of their drugs and a lot of their manufacturing is overseas. Something that is a little interesting on this tariff, though, is it doesn't affect off-brand labels. Did you see that? I thought that was kind of crazy.
Yeah, that is kind of weird. And I think what's tricky is that all these, there are some of these off-brand labels are made by major companies, like Teva Pharmaceutical out of Israel. Like that's a huge company that makes a bunch of just like generic labels.
Yeah, I know. It's going to be fascinating to see how this all pans out and how the markets affect. I mean, some of these drug companies were up a little bit because of the news that were based here in the US. But whether or not these tariffs stick is going to be interesting because a lot of people rely on these drugs. And if the drug prices go up, to be honest, I think who's probably going to be hurt the most out of this is probably the insurance companies, if you really think about it, because they're the ones that are going to be paying a lot of the drug costs. So if you think about the costs for healthcare for the average patient or person that they're providing insurance for, it's going to skyrocket, which will then eventually trickle down to the average consumer in the form of premiums. But it may not be an immediate thing right away, in my mind, it's going to be these insurance companies that are probably going to get hosed off the bat.
Well, I think you're right that eventually this does trickle down and impact the everyday American in a negative way. I think about my mom's medicine that she's started taking for this, very rare condition that she has. And that medicine, I think that was like $300,000 a year. And she's not paying that, right? Her insurance company, thankfully, is covering that right now. But she does have an out of pocket expense, and that expense can go up in addition to just like the regular premium, the monthly premium going up. So I'm nervous about this. And I think what's kind of tricky, and this is going back to the Joe Rogan interview that we were talking about, what the guest was talking about was the GLP-1s and how there are major players in that space like Eli Lilly. Novartis it's interesting because obviously that's not a US company, but they seem to be positioned due to like the way they manufacture and where they manufacture that they're going to be able to get around this. But the GLP-1 companies rely on exports from other countries to come in and keep the costs low. And it's really hard to be a startup company in this space, like startup biotech, small cap, micro cap biotech, and fighting against these big pharma companies. It really seems like it's just going to help these companies corner the market, which I think is what the people who are putting this policy in place are looking for.
Yeah, it's kind of like when you hear about all of these companies that build things in the US and you think they're not going to be affected by the tariffs, but they source a lot of their products from other
Right.
companies. Like Rivian was a perfect example of this. Rivian, a US-based car manufacturing company that is built in the US, well, their headlights are sourced from Mexico. In addition
Yeah.
to like their nuts and bolts are brought in from China, and all their tools that they use for machining are brought in from other countries. So it's pretty difficult to manufacture on a large scale while having everything in your supply chain solely US based. I understand the reasoning behind wanting to do this because there is geopolitical risk and there is risk in the event that if you ever got into a war or something like that, and all of your drugs are manufactured overseas, they could in theory be a pretty big risk to the country. With that being said, though, whether or not this is going to be a long-term tariff, they change constantly. It seems like every single day we're getting some sort of new announcement about some sort of tariff increase or
Yeah.
reduction. This is the most recent one, and it's going to be a journey to see who's going to actually benefit from this. But certainly right now, the big benefiters or benefactors of this are going to be the big US-based drug companies. And we've already started to see that reflect in some of the stock movements.
Yeah, yeah. I think Trump was announcing a deal with Pfizer right before we hopped on here, and I don't know what that deal was. I didn't have time to get into it, but yeah, I was talking about this with a client earlier, shortly before we actually recorded, and he was thinking about the next recession, right? When is AI going to disrupt the job market? And he was thinking fourth quarter this year, first quarter next year for sure. Like one of those two. And I'm like, that seems really soon.
It does
And
seem soon.
we were talking about the things that could impact the market at this point, because historically speaking, and I'm getting a little bit ahead of our agenda here, but when we are this far along into the year with the returns that we have, the odds are, probability wise, that we finish this year higher. Right.
Right.
That's just historically what plays out when you're looking at the back quarter. The last time that didn't play out was that 2018 year, I think it was, where the Fed raised rates very rapidly in the fourth quarter.
Yeah.
Yeah. And, that was a shock. And the question is like, where's the shock coming from? What kind of shock would you need to have in unemployment to really drive this market down? Tariffs aren't shocking anymore. They're just kind of like noise, and they're new things to navigate. And I think honestly, sometimes these policies that come into play, they feel like it's meant to be rapid fire noise. So you don't necessarily think about what they're trying to achieve. Think about the solar credits, which again, getting ahead of myself. But where do all these components come from when you look at solar, right? Where do the components come from? Where do the materials, the resources, the non-renewable resources come from? They're not coming from us.
No,
right?
we're not mining for that here in the US. So yeah, I mean it's a fair point. I was on with I was doing a ChatGPT exercise a few days ago, and I was asking it. I was like, "Are tariffs good?" And
Tariffs
have the
good.
tariffs and have the tariffs been working? Like, it was just a general question. And I was like,
Yeah.
I want you to ask me questions back to kind of help me determine whether or not this was a good or a bad thing. And it was basically came back with, it's too soon to tell.
Mm.
And it's one of those things where AI is probably not going to disrupt the market tomorrow. I think if to say AI is going to cause a recession in Q4, I think is kind of maybe not a lack of understanding, but it doesn't put what AI is into perspective in a lot of ways. And the same thing that the tariffs are trying to do as well. We won't know if tariffs are a good decision in the same way that we don't typically know we're in a recession until after we've been out of it. You have to look back on these things to figure out, well, did this actually work? Was it effective? Did GDP grow because of it? Is AI actually reducing the amount of participants in the labor market and hurting these numbers? And it's one of those things where we can price it in as best as we can, but this kind of segues into the Fed interest rate cuts. A lot of people, if you were to go back a few weeks ago, the beginning of September, the Fed even came out and said that there were going to be 2 rate cuts. Now it's possible with more GDP growth that we don't see as many rate cuts. And it's one of those things where it's difficult to know whether or not something is good or bad until it's actually happened and you've seen the effects from it. But certainly the ride is uncomfortable and annoying along the way.
Yeah, for sure. And to be fair to the client, I don't think he was saying, "Hey, AI is going to cause the recession." I think he's
Right.
saying basically the people using AI will cause the recession.
Will cause
right?
the recession, yeah, which is
I think,
a good point.
right. But you bring up the Fed, and I think that's a really good place to look at what we expect for rate cuts for the rest of the year or lack thereof. And I think Powell came out this week and said that the risk really is more still inflation and less the unemployment rate, right? We keep talking about the unemployment rate because we have concerns about the unemployment rate. And inflation seems like it's kind of steadied. But tariffs, one thing tariffs do is create inflation. And we've seen that historically. I've seen that personally in my own experience. And we don't know how these costs are going to get passed down, like you said, but they do get passed down. There's no just like really kind giving corporation that's just going to absorb all these costs and not pass it on.
Yeah. I mean, inevitably, companies and people are going to get hurt by this. When you have prices increase by 100%, that's going to be felt somewhere. And even if the United States government generates a ton of revenue and we turn into a socialistic economy where everything's given back to people, which seems unlikely, that's probably also not going to happen anytime soon, then yes, people are going to be affected by this. Whether or not this pans out to be a good thing in regards to markets and GDP growth and all of that other stuff will remain to be seen. But certainly in the interim, this is going to get felt somewhere.
I mean, it doesn't feel like if the government's generating revenue, it's always pitched like it's the countries that are paying. But when it was on my doorstep, it was me paying, or well, technically it was just paying. And that's just additional tax, right?
Mhm.
It's funny because when all this tariff stuff started coming into play earlier this year, people were talking about the real world impact. And I don't think you really understand the real world impact until you see it as a line item on your bill. And that really kind of drives the point home. It may help the country turn more or get closer to returning a profit, I guess, if you look at it that way. But it also took more dollars out of our pocket.
Well, yeah. And the thing is, for sure, when it comes to paying taxes in general, there is a lot of waste in the government, and there is a lot of money that you do not see a benefit from that comes out of your tax bill. There are social programs that do benefit people, but that doesn't mean they benefit everybody.
Right.
So, and that's just going to be kind of the thing is if you have money taken out of your paycheck or your goods become more expensive or whatever it might be, to actually see an ROI on that as an individual is very tough. So that's certainly going to be interesting when it comes to big pharma and a lot of these other things that are starting to play out.
Yeah. Well, you brought up the economic signals and Fed policy globally forecasting stable growth right now. Consumer sentiment has slipped a little bit. Unemployment is estimated at 4.3%. But I think the most interesting thing is something that we touched on earlier today. And it's the fact that the Chicago Federal Reserve is starting to use real-time unemployment numbers, and what that might mean, because we've talked a little bit about relying on government data and whether it's accurate or not. Right now, if we're looking at what the Chicago Federal Reserve is looking at, that's going to be taking into account ADP, payroll processing. It's going to be details coming from Indeed and Google. And of course, obviously, it's going to factor in some of that BLSA. So the question is this going to be a better way to track data that has become unreliable? We talked about it being directionally accurate. Maybe it will actually be accurate, or as accurate as you can be nowadays. Like, what's the best way to track the unemployment data?
Well, yeah, and we talked about this briefly beforehand too. With current technology and the way that things work in the way of the world these days, to look back 30 days or further ago to try to get this information to pull together some number, and this number can be manipulated at any point in time depending on where you pull the information from, isn't necessarily with the times. To have actual reportable numbers that you can look at in any day and see how it's changed and how it's affected and even get into the nitty-gritty of what the inputs are, I think is a much better way of reporting and will hopefully give us more reliable data. And in theory, that's not manipulated if it's a live stream situation, versus polling from different places to try to combine it. So hopefully we'll get more accurate, more reliable data. And it's something that we can hopefully emulate in other parts of the country as well, and with some of the other data that we trade off of.
Yeah,
I'm
I
hoping
mean,
that this is a benchmark that is set moving forward.
I think it'd be great, honestly. And it's nice that it's real time, right? I don't know how frequently it's going to actually, the data is going to be shared with us, but it should remove some of the incentive. Like, if you think about what does ADP get for fudging the numbers, or Indeed, or at
Right.
Google? Like,
Nothing.
yeah, it doesn't seem like there's any benefit to them manipulating the numbers that I'm thinking of in this very short thought process,
Yeah.
you know?
Yeah, I mean, in theory, hopefully, most people that are in this are unbiased parties, and I guess you could argue that everybody has some sort of bias.
Sure.
But with that being said, I am a big fan of this, and I'm hoping that this translates into other numbers like inflation and other things like that too. That would be useful to have
Yeah.
in more realistic real time data. So we'll see.
Yeah. I think inflation is so, there's so many contributing factors there that
Oh, it's
the
yeah.
everyday people don't care about. And they're all national numbers, and they do nothing to tell you about your experience in New York City, or on the seacoast, New Hampshire, or in LA, or in Montana. Like, it's all different. It's all very diverse.
It is, and it totally depends, like, on a bunch of different factors, and a lot of the times what they gauge for inflation doesn't actually have an actual impact on the consumers that are reading the data.
Right.
So, it's
Yeah.
one of those things too where it's like, okay, well, if I'm shopping for a new car this month, and if car prices have gone up by 15%, I'm going to think inflation's horrible. But
Yeah.
if I don't need a new car and if the price of eggs and gas have remained flat, I'm going to be like, inflation's not that big of a deal. So
Yeah.
it's very personal because it's just like what you said, just the same thing with tariffs. How it affects you, is going to be different. If you order something from overseas, you're going to see that line item versus someone else that never orders anything from overseas and is just, living their life.
Yeah.
It's personal.
It is. It's so much of it's personal choice. I was thinking about this with avocados the other day. And I am not an avocado fan, but I live with two avocado aficionados. And we tend to buy a lot of avocados, bottom line.
Okay.
And
Big
I go
guac
to
fan.
they don't always make it to guac form. But
Okay.
so I go to a lot of grocery stores in the area because they all have different things. And this is maybe like a little bit too detailed, but here I go anyways, right? So
Let's send it.
if I want to get my Cabot whipped cream, right, I can't go to Hannaford. I got to go to Whole Foods. And if I want to get like the popcorn that I like, I can't get it at Whole Foods. I got to go to Hannaford because it's like a local little market, right? So it's funny, these choices that you make. But everywhere I go, I look at the avocado price and I feel the avocados because they're like just little bitches. These avocados, they there's a joke that I can't remember. I'm gonna butcher the joke, but it's like avocados are like, not ready, not ready, not ready, ready, too late, and you missed it. And
Yeah.
so I'm always trying to find like the perfect avocado that I can just bring home for them to have that night, because otherwise I'm like hoping that the avocado is ready in 3 days when we actually have tacos. So if I go to Whole Foods and I get an avocado there, I'm going to be paying like, I don't know, $2 an avocado. If I go to Hannaford or Market Basket or something, it might be like $1 an avocado. But if I go to Joe's Meat Shop, where I like to get my fresh butcher meat that's not like full of just whatever, God knows what, it's been packaged for preservatives in the grocery store, and I'm like, I got to get an avocado while I'm here. It's going to be $3 or $4 for an avocado because it's a small little meat shop. And that's like a personal choice. And how often does that happen where you get gas, right? Like where you make these choices and it has your own personal inflation rate attached to it.
Yeah, totally. I mean, if I turn left out of my neighborhood, the gas price is like 15 cents different than if I turn right. And it is the same distance. These gas stations are each a mile and a half apart. And
Yep.
Kayla and I always talk about that. And, speaking of the grocery shopping this week, I went and bought eggs, and we were at a local meat market here, McKinnon's, and I just grabbed a dozen eggs without looking at the price, brought it up to the register. It was $11.99 for a dozen eggs. And I literally
At McKinnon's?
I never, like, I'm not very good at this, but sometimes I just will grab stuff and not look at the price. And she rang it through, and I looked, and I was like, what? And I was just like, just remove the eggs. And I just go to the local farmer's market here, and I get a dozen eggs for $3.99, organic farm fresh eggs. So inflation and tariffs are very personal, I guess, is what this all comes down to. And it's probably going to be the same thing with the drug situation as well.
Yeah.
I'm personally not on any drugs at the moment, but with that being said, if I was, depending on which drugs I am, it would really affect me. And the same way that you were just talking about your mom, hopefully it doesn't have a major impact on it, but it could absolutely. And it's the same thing with everything else that we talk about today. It's difficult to talk about finances with it not being personal.
Totally. But at the same time, I choose to buy an avocado at one store or another, or not to buy at all. That is a choice. For some people with drugs and
you don't have a
prescriptions,
choice.
yeah, you don't have a choice. And that's, we always talk about gasoline prices with inflation, but really, like, honestly, most of the time that it's like a 10-cent difference per gallon. And what are you saving? Like $1.50 by going to one place or another? Is that really going to make or break your month?
People are so transfixed on that. And I mean, I get it. I get it to a certain extent. Like when you talk about heat and energy prices and natural gas and propane and things like that for winter, I get it.
Yes.
But I think there are a lot of other factors when we talk about inflation and numbers that go into inflation that would probably give a better gauge about how the average consumer is affected versus how it's been historically benchmarked. Which, speaking of gas prices, can we talk EVs?
Yeah, let's talk EVs.
Okay, because this was a big month. As of today, this is the last day, you can get the EV incentive tax credit. So $7,500. Yeah, so $7,500 was historically the tax credit, which I'll say maybe not like derived a lot of the sales for EVs, but it was certainly a big factor when people were making purchases because historically speaking, EVs have been more expensive than gasoline cars. Yeah. Now that that's rolling out away with this one big beautiful bill, a lot of car companies have been rushing to try to include this incentive in other ways. So you look at Ford and GM are now rolling it into lease programs. Tesla's doing the same thing. And then on the flip side of that, you have other companies that are pulling back their EV sales altogether. Mercedes announced that it's no longer selling their EQ line in America, period. Porsche, who is rolling out their flagship EV, has now said that it's not doing any EVs anymore and has ceased production on that. And what that's mean is that their stock has sold off 40% over the last year. Because when you think about whenever there's some sort of big tariff change or whenever there's some sort of EV tax credit being pulled back, people will think, oh, well, they just won't sell that product. But the problem is Volkswagen in general have sunk in probably 5 to 10 billion into building out assembly lines, hiring people, putting a bunch of money into R&D to develop these cars that is now essentially useless. And if you look at Jaguar and Land Rover, they're getting hit pretty substantially as well because of tariffs and this EV credit going away. Jaguar was famously had a commercial that was about transitioning them to EV, and now that is going away entirely while they were just hit with a massive cybersecurity attack. So now they're losing $50 million a week in terms of their production. And they were said that they were going to be shut down for a week. Now they're going to be shut down entirely. They're saying probably through the end of October, best case scenario. So there's a lot of things that are getting shaken up in the auto world right now. And I think there's going to be a lot of continuous shakeup in there, and a lot of companies that were earmarked to go all EV are starting to pull back on that. And we'll see what the next administration holds. I wouldn't be surprised if in the future, again, some sort of tax credit comes out. But currently at the moment, A lot of car companies are struggling with that, and I think that's probably going to be the case here for the foreseeable future. By the way, none of this is investment advice.
Yeah, none of it ever is.
Yeah.
But I think what's shocking to me, because you told me about this Jaguar commercial, and I never had no idea what you were talking about, right? And now we're at this place where Jaguar Land Rover is going bankrupt, and they're getting a bailout from the UK government.
Do you think it's insurance fraud?
I don't know. I'm not going to speculate, but I am going to think. Look, I feel like there are some preconceived biases when it comes to, let's just say, a Land Rover driver, right?
Yep.
And if you think that bailouts are hard to get public acceptance of for a company like GM, then if you think about the Land Rover clientele, right? Like it's interesting to me. I don't know what that insurance fraud situation might look like. I'm not well versed in this bailout, but I don't believe that anybody in the US would support such. It's like if Tesla was getting a bailout right now, and then they would probably argue like, well, our EV infrastructure requires it, which is interesting. Colin, do you know what the biggest EV car company in the world is?
Is it BYD?
It is BYD as of 2024.
Okay. Yeah.
So in terms of production, we've already fallen behind. Tesla, I guess, was our flag bearer. BYD, even before the Elon Trump mess of 2024, BYD had taken over. And I had never actually seen their cars until I went to England, and they were everywhere in England. And I saw BYD dealerships, and I was like, wow, what's going on here? And they're not like, they're just like little people movers. They're not nice vehicles. But they do the job, and they do it efficiently, and it's clean, and people like them.
And it's cheap. It's $22,000.
Right. So do we just not care about losing that? Like, are we just saying, well, whatever, we'll let BYD take over?
Well, this is the thing that's kind of fascinating, is that if you were in BYD, I've seen some of their car reviews. They have these cheap people movers that, just as you said, is basically just an appliance, because right now it's turning into essentially a smartphone, where really what you need is a car that charges quickly and gets you from your house to work in the grocery store and pick up the kids. It doesn't need to go 0 to 60 in 1 second and fly you to the moon. All it needs to do is plug into your house and meet this demand. So is it going to be a race to the bottom in terms of price? And there's been a lot of talk about not letting BYD sell in America because it's going to massively disrupt the US-based auto manufacturers. I mean, imagine if the average, I think the average electric car right now is maybe around, and you can correct me on this if I'm wrong, is around like $50,000.
Yeah.
Imagine if you just released an entire car line into the country that was as good as those $50,000 cars, but it was $24,000. You would hardly have any reason to go and look at those other companies. You could buy 2 of them and still spend less than a full price electric, whatever the car is that you name. And if that's the case, then that would completely destroy, United States manufacturing and everything like that. And that's actually what Porsche is struggling with right now. And a lot of these other high-end manufacturers like Mercedes, they saw China and earmarked China as one of their big opportunities in terms of growth. And now BYD, and it's not, and there's other car companies there too in China who are doing this. And that industry and market that they were relying on has been sapped up super quick. And their profits, like, as I'll keep going back to Porsche, they were estimating 5 to 7% profit growth. They just slashed it down to 2.
Yeah. Well, and Tesla was one of those companies that they were betting on growth and market share growth in China. But China basically just said no. Like, literally the country is saying, we want BYD and our companies to be the champions in this space. And they have the resources for it, so they can do it at a cheaper cost, to your point. And it's interesting to me because we've kept BYD out, but we let TikTok in. And we're finally at this point where we forced a sale for TikTok, which was delayed illegally, by the way, but delayed. And finally it got done. It should never have been here in the first place. China would never let Facebook or Instagram go in there and take over their market. I can't believe we let it happen here. I liked all of the. Do you remember all the TikTok like up in arms videos.
Oh,
Like everybody was like crying their TikTok was
yeah.
going to go away.
Was that this year or last year? I don't even
It
remember
was
when that
last
was.
year. It
It
was
was
at
last year.
least last year. Early, like it was way over a year ago.
Yeah.
But anyways, I think with some of these decisions, we're very focused on AI and who's going to win the AI race. Why don't we care about this one? Like, what is it about the EV space that we're not going to, Elon was ideally, I think, positioning to get government support. The reason that he fell in with the Republican Party in the first place is because he wasn't getting that
Any
kindness from
support,
Biden.
right?
Yeah. So, and then he didn't get it in the end, and we just don't care. We just wrote this off. It's a loss, and I don't get it.
I think for me, and I'd be curious to get your take on this, American made to me doesn't mean as much anymore because I know that being American made doesn't necessarily mean that all the components are made in America. It's
Right.
manufactured in America. But to
Mhm.
me as a consumer, I would never willingly spend double the price on something that was American made if I can get the same quality for half the price, because I know that's going to impact my family. That's going to impact my finances. That's going to impact my future in terms of compound growth. Plug for the podcast shamelessly. But with that being said, when you're talking about a huge purchase like a car, I mean, I was just talking with one of my clients yesterday who was looking at a Mazda SUV. It's beautiful, but she's looking at a certified pre-owned Mazda, and I think it was 29,000 or 30,000, something like that. BYD and all these other EV car manufacturers that are based out of China, you can get a brand new car for 22,000. They make cars that are boats. You can take a BYD and drive it into a lake and it is a boat. They have cars that when you drive down the road, they have cars now that when you drive down the road will use the suspension and jump over obstacles.
Okay.
There's some
I
crazy
gotta
stuff
spend some
out
time
there.
on YouTube. Like you
So just YouTube it if you're ever bored. But I guess my only point is I can appreciate why all the car companies don't want those kinds of car companies to come in. And it's the same thing though, not just with car companies, it's the same thing with other products too. If you're going to undercut the market so much, it's a big disruption. It helps the consumer, but it might hurt some people on the job front. So it's one of those things where it's a fine line. Me as a consumer, I would love if a brand new car was $24,000. But if
Yeah,
I
no,
was working for GM,
yeah, you're right. Look, this is the reason that we got this big deflationary movement in the first place is that the cost of goods went down because we were outsourcing all the labor. And
right,
this when people are anti-Amazon, the argument for Amazon is that they are keeping the cost of not just goods, but also shipping, just like the infrastructure, the cost associated with Amazon is lower. And without Amazon, we're all left paying more. But we're all, not we're all. There are people who are very anti-Amazon for whatever their reasons are. It doesn't matter that they're one of the largest U.S. employers, and they honestly seem to, reduce costs and help the consumer. At the same time, there are people saying, well, those consumers never had a fair chance. And I think what's tough, your point about the, made in America, I think, I don't want to call it virtue signaling, but it's essentially feeling good about what you're buying, right? Like if I say this is made in America, then I'm supporting an American company, American jobs, right? Like I'm trying to support my home team with that purchase. I think when I buy something that is made in America intentionally, when I'm intentionally doing that, I don't think it's necessarily Schadenfreude and I'm just like trying to punish China. I
right.
think you're just trying to help the home team.
Yeah, I agree with you. Like, I could absolutely see it that way, where I'm helping the home team, I'm trying to create jobs. That's like, personally for me, I would much rather go to a local coffee shop than to go buy coffee from a large franchise.
Right.
I think of
Yeah.
myself as helping a more mom and pop store than I am about going and supporting a big corporation. So I totally see the argument there. But I just don't know, like, at what point, and there has to be a price point where you look at it and you say this is just too expensive to support in a good.
Yeah.
And I guess everybody has that number with something. And when something is 50 to 60% less, that's kind of tough. Like if I could go and get a cortado from Starbucks for $2 and the mom and pop shop is 6,
Yeah.
that would cause me to rethink it. And there is that economies of scale at play here. And I don't know what the answer is because it's going to be different for every industry. But certainly with cars, if something was half the price for the same product, I don't know.
Yeah, it's a really good point, and it's hard because there's no threading the needle. Like and we all pick and choose. Like I will go to my favorite coffee shop after I drop my daughter off at the bus stop. They source their coffee from your favorite coffee shop, and I'm sure there's a
Right.
markup, right? Like I know that my cold brew is more expensive at that coffee shop at my coffee shop than if I just go directly to your coffee shop. And either way, it's more
The
expensive than
source.
Starbucks. Yeah. So I
Yeah.
don't know. It's tough. I think that the people, Amazon rewards scale and efficiency. And, there are certainly some small businesses that can't play in that field and they will suffer. And I don't think it's fair to punish small businesses for not being able to adapt, but it is
Right.
kind of it's a logical kind of evolutionary consequence, isn't it?
It is. I mean, something that I was reflecting on the other day, and you and I have talked about in the process of building a house at the moment, the tariffs that were put on, I'll say a lot of the goods, have caused a lot of our domestic home goods to go up in price.
Mm-hmm.
Whether it's like faucets or lighting or hardware or whatever it is more expensive. So what the tariffs have done is actually encouraged me to outsource to another country. Because the tariffs are making things in the US more expensive, I am now buying stuff from
Directly.
overseas at a lower cost. So it's like
Yeah.
completely the opposite of what should have happened because you should be encouraging consumers to buy domestically. But because all these domestic companies have had to increase their prices, I'm now looking to buy stuff from overseas because even with the tariff, it's significantly less expensive.
Yeah.
It's a weird backfire situation.
It's all gray. It's like nothing works 100% all the
No,
time. I feel like the right and wrong to me is always black and white, but I feel like morally, like there's some sort of gray area that you can almost get argued in and out of things. Sometimes I hear your perspective or I hear Jessica's perspective or I'll hear a client's perspective and it will make me rethink my perspective. And I think there's this whole space in our lives that allows for rethinking. Whereas, like some things, like, I don't know, murdering my next door neighbor would
that's
be just
bad.
very clearly bad.
We know that we can agree that that's bad.
That is bad, right? But you can have for every situation like that, there's like a Les Mis, like I need bread for my family situation, right?
Right.
And that's, I think, where we see more and more. We're running long again because this is what we do. I don't want to just like move past what's actually happened in the markets because what's happening in our clients' accounts is kind of what they care about the
That's
most.
fair.
So I'm just going to share my screen here and just walk through a couple of things. The first thing we want to just focus on is the S&P 500 year to date total return up 14.35%. And, obviously there's a little bit of room to move here before the close of market today on the last day of September. But roughly this is where we are. It's the seventh positive quarter out of the last 8. This is a bull market, whether we like it or not, we continue to point out. But it's not just a bull market for the S&P, it's also a bull market for gold. So gold is at all-time highs. It's up 45% this year, right, through the first 9 months of the year. And that is obviously outperforming the S&P. It's also outperforming Bitcoin. And the reason I think it's worth highlighting those two things is because Bitcoin is supposed to be the gold killer, right? And gold is supposed to be not necessarily the antithesis of the stock market, but people often will invest in gold because they're worried about the stock market. And we're in a situation where people are investing in gold, and the stock market is a bull market that continues to go up. So how do we square this? Like, what's going on?
Well, that's a great question. Something that I think is quite interesting with this is that if you go a little bit further back and just look at these charts, how correlated they actually are. Now,
Yeah.
granted, Bitcoin's just gone absolutely to the
Let's
moon.
take Bitcoin off of that.
Yeah, maybe eliminate Bitcoin from that. But if you
Yeah.
actually look at these, is gold really a true diversifier?
Yeah. Well,
No, is
it
the answer.
wasn't. It was at points, right? Like this is on Liberation Day. You
Right.
had the stock market go down and gold go up, right? You've had various times of underperformance from gold, Actually, I would say that gold has historically underperformed and then goes up in like quick swings, and then um, maybe underperforms again. Who knows? It's fascinating to me that we can sit here and look at, this ETF for on the screen. We're looking at gold versus SPY for the S&P 500. And over the last 5 years, the stock market is still outperforming gold, but just barely. And when you look at some of these screens over the last 3 years, you've got gold outperforming. Over the last 10 years, I think you're going to see gold outperforming again. No, sorry, stock market outperforming again. I don't know if there's anything to glean from this, except for there are other areas to invest. It's not just the stock market. It's not just the bond market. I won't show the bond market here because I don't want to make it feel bad. But, Bitcoin, gold, stocks, bonds, US, international. If anything, for me, it's just the argument for diversification.
Yeah, I totally agree with you. I mean, that's basically what you're seeing there is there's going to be ebbs and flows where gold goes up and outbeats the stock market, then it falls and it's not as good. There's always going to be news out there that's saying, oh, well, it's going to be inflation's going to go up and gold's going to go down. And, there's a lot of concerns about X, Y, and Z. There's always a case for the other direction, but try not to time it, because that's just not going to work. And just try to have a diversified portfolio when it comes to including all of these different things. And I think there's a very strong case out there to have Bitcoin as part of your holdings as well at this point, because that is clearly here to stay.
Yeah, I think at this point, I always said early on that as soon as Wall Street figured out how to make money off of Bitcoin would be here to
And
stay.
here we are.
And here it is. It's, I think the reason that gold is going up is less about, uncorrelated assets or inverse returns or anything like that, and more just a reflection of, psychology, just like where we are in terms of investing emotionally. I think, obviously the dollar has been weakening, and so gold can strengthen. And, there are those people that feel like the dollar as the reserve currency is short-lived and not here to stay. Gold is not going to become reserve currency. There's just no functionality to it. But I think that's why it's going up. It's like these fears of either a stock market crash, so I got to get into gold now, or the dollar is weakening and I've got to make sure I've got gold for the apocalypse. I don't know, honestly. It doesn't ever seem to be. The argument against gold historically is that there's no income that it generates, right? It's just price.
It provides
like
very
Bitcoin.
little use. I mean,
Yeah.
people will say, oh, well, it's a conductor, heat shield. And
Oh yeah.
it's like, I don't know of anybody that's lining up things for a heat shield using gold. Like I could be wrong, but yeah. Anyway,
you got to get your gold-plated weights from China, Colin, for your home
exactly.
gym.
That's a thing now. But yeah, it's not real gold. It's just plating. But
Just
anyway,
plating.
just plating.
All right, let's wrap it up, Colin. What are your final thoughts?
Let's wrap it up. So final thoughts, big pharma, probably going to be some decent winners out of this recent tariff announcement. Gold has done very well. Gold investors have done very well. Stock market has performed very well. Telehealth incumbents like Teladoc and Amwell will probably be big winners as well. This is all speculation. This isn't investment advice by any means. EV car markets are going to probably see some headwinds coming up here in the future, as they have been over the last few months. And we'll see what shakes up over the next few months, because every single month seems to be exciting and new and keeping people on their toes.
Yeah, it does seem like there's no shortage of things to talk about. I think the last lingering thing that we should probably address is the potential government shutdown. And I'm going to address this by saying it never matters. Like far from a stock market perspective, God, I remember the first time I heard about the risk of, as a financial advisor, that I heard about the risk of a government shutdown. I was like, oh man, maybe this is something to worry about, but it never is. I had a friend that worked for the government when I was young, and he'd be like, a government shutdown sucks because I don't get paid. But then when it's over, I go back and I get my back pay. And then I just had a vacation for a week or two or whatever. And there are real concerns functionally with a government shutdown. So I don't want to make light of it. But when it comes to your portfolio returns and the market returns, that's not where it matters. It's the everyday stuff that you rely on from the government. That's where you worry about the government shutdown, not in your portfolio.
Yeah, I mean, certainly it can I'll say, affect some travel plans here and there because, air traffic controllers and people that, work at airports are often government employees and stuff like that. But with that being said, I wouldn't put too much stock in it, to be completely honest. There have been 3 government shutdowns since 2018, and during each of those government shutdowns, there's been hardly any effect on the stock market whatsoever. In fact, in 2018, when there was the 3-day shutdown, the stock market went up. So try not to put too much stock in it. Most of the time, the S&P 500 trades off of earnings and companies and things like that, not so much what the government is necessarily doing at the time.
Yeah, keep in mind that it's just, the things you worry about are the benefits that you receive from the government, not the actual portfolio or stocks like Colin was just saying. So it's something to be concerned about in your lives, maybe. It's not something to be concerned about in our inbox or on the phone.
Financially. Yeah.
All right,
awesome. Well,
Colin.
I think that's probably a great place to wrap. So thank you everybody for tuning in, and we'll be back on for October recap here in about a month.
Man, so much to come. All right, we'll talk soon. Thank you.
Thanks.
Compound Growth with Wheeler and Colin, sponsored by Ko-Fi Advisors. Reach out today. Yay!